Novo Nordisk's shares have seen a significant decline in late 2024 due to disappointing trial results. According to CNBC, trial patients of the new weight loss drug, CagriSema, only managed to achieve an average weight loss of 22.7% compared to the anticipated 25%. The stock is currently down 42% from its high in June 2024 and another 5% from the drastic 20% decline that resulted from the trial results. With this in mind, and the fact that a 20% decline as reaction to the 2.3% shortfall in a clinical trial seems a bit excessive, the question poses if the company could finally be at an attractive entry point again, compared to the rather high multiples of the last years. Business and growth prospects. The company is a global leader in the research, manufacturing, and international distribution of pharmaceutical products. It is mainly operating in the three business segments: diabetes care, obesity care, and rare diseases. As of Q3 of 2024, their revenue was divided like the shown table. Diabetes segment. Novo Nordisk has been able to capitalize from a sad trend as the global diabetes patients have quadrupled from 1990 to 2024. Experts expect this trend to continue as they predict another increase of 54% in the US between 2015 and 2030. In general, the diabetes drugs market is expected to grow at a growth rate of 7% in the following years. Obesity segment. There is a massive overlap between the causes of obesity and diabetes, as they tend to influence each other positively. Same can be said for the synergies in the treatment of both, which is massively benefiting Novo Nordisk's operations, as already developed therapies for diabetes can also help at managing obesity issues. The new hyped obesity product, Wegovy, for example, is based on the diabetes medication Ozempic. Like diabetes, the obesity treatment market is expected to grow. Through the rather low coverage, the opportunities in this segment, however, seem much more promising. From 2023 to 2024, for example, the growth rate of this segment was at a staggering 114%, while NVO managed to only achieve growth of 69% due to capacity shortfalls and increasing competition from Eli Lilly, for example. Between 2021 and 2024, the growth rate was hovering between 20% and 150% per year. Going forward, this new market segment is positioned to continue growing at high rates. Morgan Stanley is even expecting an increase of 15 times until 2030, indicating that as much as 9% of the whole US population could be taking obesity medication by 2035. The anticipated growth rates for this market lay between 25% and 30% per year until 2030. In summary, there is a total growth expectation of 12% per year for the next years, using the aforementioned growth anticipations as well as the current revenue share per segment. Valuation. When comparing Eli Lilly and Novo Nordisk, the latter seems to be the better buy on the first look. But the big difference in the PE ratio and the enterprise value to EBIT is caused by the difference in the anticipated growth rates of the next few years for the companies. As for Novo Nordisk, EBITDA is only estimated to grow by 22%, while Eli Lilly is predicted to reach 74%. To be honest, I personally think that the expectations of Eli Lilly seem a bit optimistic, while the ones of Novo Nordisk are too pessimistic. But even with these differences in growth expectations, I think that Novo Nordisk is undervalued right now, and here is why. If we assume the mentioned revenue growth rate of 12% per year and anticipate that the EBIT margin as well as the free cash flow conversion stay constant at the average of the last 3 years, we get the following discounted cash flow analysis for Novo Nordisk. With these assumptions, we get a fair value market cap of $420 billion, indicating that the company could currently be undervalued by 13%. If you enjoyed the video, please like the video and subscribe to never miss my latest buys.